Good morning, everybody. This is Mr. Oxy coming at you live from Palm Beach in Florida. It is Sunday. It is January the 16th. And what I want to do is take a few minutes of your time and just review some of the things that happened on Wednesday this past week. Wednesday was January the 12th, and there were some interesting media reports. And I thought, you know what, why don't we just take a few minutes and revisit some of these and quickly take a look at what different people were saying. So the first thing that came to mind for me on Wednesday last week was the EIA sees oil prices dropping in 2022, 2023. So let's take a look at the article and then you guys tell me what you think. Global inventory builds due to supply growth outpacing demand increases will pressure oil prices down this year and next, the U.S. Energy Information Administration said in its short-term energy outlook. Now, the U.S. Energy Information Administration is a government entity, and as someone who doesn't trust government when they say almost anything, I automatically have a little bit of built-in bias. So I'll just say straight off the bat that anytime the U.S. Energy Information Administration issues a statement, I am almost inclined to take the other side of that particular trade. But you guys can tell me what you think. Brent crude prices, which averaged $79 a barrel in the fourth quarter of 2021, wow, what a quarter, are said to average $75 a barrel during 2022, so down $4 a barrel, and then $68 a barrel, so more than $10 down in 2023, the EIA forecasted. The US benchmark, WTI, West Texas Intermediate Crude, is expected to average $71.32 per barrel this year and $63.50 per barrel next year, the EIA said in its monthly outlook. Early on Wednesday, before the EIA's weekly inventory report, WTI crude was trading above $82 and Brent crude was above $84 after Fed Chair Jerome Powell said on Tuesday that the US economy would see a short-lived impact from the Omicron surge and was ready for the beginning of monetary policy tightening. While most of us have been talking about and predicting and seeing some monetary policy tightening happening anyway within the near future, and my humble prediction on that one is we're probably going to see 3 increases or so during 2022. According to the EIA's estimates, inventory withdrawals globally averaged 1.4 million barrels per day last year, thanks to faster demand growth than supply increases. This year, however, demand growth is set to slow while supply will grow faster, leading to builds in global petroleum inventories. Well, I'm not going to go too much further in this one. If you want to read it, you can actually find the link to this on our community channel. Anyway, this is the EIA prediction for 2022-2023. So let's take the other side of the coin and take a look at this one. On the same day, January the 12th, 2022, oil price reported a watershed moment that could send oil prices to $100. Ninepoint Partners is Eric Nuttall. Most of you will be familiar with Eric. Eric said oil prices could reach $100 per barrel in a structural multi-year bull market. Nuttall also said that the most bullish factor for prices is the exhaustion of OPEC Plus's spare production capacity. Crude oil prices could reach $100 per barrel, according to Eric Nuttall, the latest to add to a growing number of analysts expecting 3-digit oil prices. The oil market remains exceptionally tight, Nuttall told Bloomberg, adding that when we look at global oil demand, we are back to pre-COVID levels. So there are strong reasons to believe the market will continue to grow throughout this year as Omicron passes. Now, for what it's worth, once again, in my very humble opinion, Omicron, or however you're supposed to say it, has already theoretically passed, even though it's still with us, and we might still see a variety of different variants, dating back to the origin of COVID-19. For the most part, in terms of the news I've been following and trying to keep up to date with what's happening with things like Omicron, it appears to be relatively mild and most people who test positive effectively are either asymptomatic, which is a fancy word for healthy, or otherwise have a cold. The story remains on supply. I believe we're in a structural bull market, a multi-year bull market for oil that will end in all-time high oil prices. The asset manager's opinion reflects an overall bullish sentiment on the market, as noted by Barron's in a report from earlier this week, which saw a growing number of traders betting that US crude oil could hit $100 per barrel. Once again, this link to this article is also on our community channel, so you can look at it at your leisure if you're interested in reading the entire article. So now we have the EIA saying oil is expected to trade in a range of sort of high 60s if you take a look at WTI over the next couple of years, 22, 23, and up to about the high 70s for Brent. And here you have Eric Nuttall saying we expect crude prices to hit $100 per barrel. And then the BOE report, also on January the 12th, which was Wednesday, noted that JP Morgan sees OPEC spare capacity falling through 2022, which effectively contradicts the EIA's opening statement that I shared with you in this particular video. JP Morgan on Wednesday said it expects the Organization of Petroleum Exporting Countries, that's OPEC, spare capacity to fall throughout 2022, driving a higher risk premium for oil prices. And JP Morgan, one up on Eric Nuttall, predicts that oil prices may rise as high as $125 per barrel this year and $150 per barrel in 2023. Now, most people who try to predict stuff are fabulously wrong most of the time, which includes me. The only guy who's been an exception to that particular comment that I just made over the past year or so has been Dr. Yidi Zhang, whose predictions on Oxy's free cash flow, stock price to a degree, and certainly revenue and earnings per share have been remarkably accurate. But as a general rule, most people who try to make predictions get it wrong. So here you have sort of three different opinions, and JP Morgan and the EIA respectively are bookending these two opinions because on one hand, you have the EIA predicting a decline in the stock price, and on the other hand, you have JP Morgan talking about $125, $150 per barrel. So the truth might lie somewhere between the two. So maybe Eric Nuttall's prediction of about $100 per barrel, or triple digits anyway, whatever it ends up being, is more correct. But who knows, right? So the esteemed organization, which is the government agency, says 60, 70 bucks a barrel. JP Morgan says $125, $150 a barrel. So those are your two bookends. And then maybe the answer is somewhere in between, in the middle. Who knows? Let me know what you think. But either way, guys, it's a bull market. And if you're in energy and you invested in energy, you should be very comfortable with whatever current positions you hold. You definitely don't want to be short energy at this stage of the game. Let me know what you think. I look forward to your comments, and let's get some conversation going. Have a happy Sunday, and I'll see you guys soon. Bye-bye.